easy sections, I believe, would be section 50 and section 56, where you have to give interest and you have to take interest. So that was my preliminary judgment about section 50 and section 56. And section 56, I don't know, somehow it is omitted from the act that department has. They don't bother about section 56. So they don't want to give interest, but they want to charge interest. So we come to section 50. Now, even section 50 has had its long history. If we go back since the introduction of GST, and a long-standing disputes, and some are still continuing. Now, if you talk about the dispute and history, I'll take a little bit of time talking about the history of Section 50. The dispute first started was regarding the rate of tax under Section 50, subsection 3, regarding the utilization and availment of wrong ITC. Now, initially the section subsection 3 was based on the returns that were to be filed and the process that was to be followed. That your supplier will file GSTR 1, you will get notified, and if you don't have the invoice, if you don't see the invoice in your GSTR 2, you will upload your invoice in GSTR 2, and that will have to be approved by your supplier. And if the supplier doesn't approve and you still take the input tax credit, then the interest charge shall be 24%. I think that's how it was at that time. But unfortunately, GSTR 2, GSTR 3, the process never seen the light of the day. So that was scrapped. But somehow department continued forcing 20%, 24% rate of interest. Now, even when this dispute was still on high, another dispute arose regarding the gross liability and net liability on the amount on which the tax is to be, interest is to be paid, whether on ITC amount is to be paid or whether not is to be paid. Meanwhile, a Madras High Court judgment came, and the Madras High Court said that the interest has to be levied on that portion of which the funds have been deprived, on that amount only. And what they are deprived of, they are only deprived of the amount that has been paid in cash and not in ITC, because the taxpayer has already paid the tax and they already have the tax for which the input tax credit is being taken. So they are not deprived of the amount which is there in electronic credit letter. So before this thing could have settled, another question arose was regarding the cash, the amount that is available in cash ledger before filing of return. And before we could have, department could have done anything, or government could have done anything, another question that came was regarding availment and utilization. But if there is no loss to the exchequer, as there is no utilization, then why interest should be charged? So over the period, we have seen so many amendments, number of amendments, section 50, a proviso was brought to section 50, subsection 1. Rule 88B was finally introduced from retrospective effect for calculation of interest. Section 50, subsection 3 was amended to ensure only availment and utilization. Wrong availment and utilization will be chargeable to interest, and which is somehow different from availment or utilization which we have in section 73 or section 74. So in some sense, they are saying, okay, even if you have not caused any loss to the exchequer, will not charge you interest, but will still punish you for your theft or for your heist or for your wrong taking of input tax credit. All these points have been to some extent settled, but the biggest litigation still remains, and that is section 50, subsection 1, which is the charging section. And why it still remains? See, there is still no clarity for the procedure how the interest has to be recovered by the department. Now, if we read the section in itself is pretty straight and simple. Now, every person who is liable to pay tax, and when we talk about tax, it is any tax, be it outward liability, be it RCM liability, or be it any other tax. If you are liable to pay the tax and you fail to pay the tax, you have to pay the interest at the rate of 18% for the period of delay. But what this section has, first it says the person who is liable to pay the tax failed to pay the tax within prescribed period, he shall pay. So there is a mandation for payment of interest on his own. So to some extent, there is a self-assessed liability to calculate, compute the interest and pay the same. So in that sense, it is not only mandatory, but it is also automatic. When the burden onus is on the taxpayer to calculate his own interest and pay the same along with the tax that he is liable to pay. So the purpose of section 50 subsection 1 is to establish a clear liability for the payment of interest on delayed tax. The use of word shall makes it mandatory, and he has to do it on his own also makes it automatic, as the burden to pay and calculate that tax is on the taxpayer only. Historically, as we understand, interest has always been stated to be compensatory in nature. Courts have held that for long period, and irrespective of the reason of delay, you may get away with the penalty for sufficient cause, but there is no sufficient cause to get away with the interest liability. Interest has to be paid. It is not discretionary. It is mandatory, and it has to be paid. Now, if it is not discretionary, if it is mandatory, if it is automatic, then what is the dispute actually about? Now, if we go about the dispute, is the majorly today is regarding the process that the department has to follow if they have to recover the interest. Can they recover the interest straight away? Or do they have to follow the procedure 73, 74 process of natural justice? Can they invoke 74 for only interest amount? Can department actually invoke 73 for recovery of interest amount? Forget about 74. Can they also choose section 73 for recovery of interest? If they can, then how it should be done? If they cannot, then what is the process? What is the mechanism to recover the interest, particularly self-assessed interest? When I say self-assessed interest, it is on the self-assessed liability based on GSTR 1, GSTR 3B. And even if they have calculated the tax amount, they have assessed that DRC 01 was issued, after that DRC 07 was issued. Now, many times we see DRC 01, it does not specify the amount of interest. But when DRC 07 is finally issued, you find the interest amount in that. So can that take place? Will it not be beyond the show cause notice, the amount of interest? Or what if even DRC 07 does not even have the interest amount? Will the assessee still be liable to pay that interest? Can they still recover that amount of interest? See, section 50, subsection 1, if we read it with section 75, subsection 8, whenever tax is modified by the appellate authority, the interest automatically gets modified. It will not remain same. If the tax is reduced, interest will also reduce. If tax is increased, interest will also increase. It is always directly proportional to the amount of tax that is being charged, that is being asked. Section 75, subsection 9. As I asked the question, if it is not in the DRC 07, interest amount is not mentioned in DRC 07, can it still be recovered? Yes, it can still be recovered. Interest is still payable irrespective whether it is mentioned in the order or not. But can it still be recovered when it is not there in the show cause notice? Now, the legal issues that we are majorly facing today, and even in group yesterday, one of our colleagues were discussing, direct order was received for recovery of interest for the demand of interest, and no process, no adjudication process, no 73, 74 was followed. So can it be actually done? Now, if we say the liability arise automatically, it can be done. But can it actually be done without following the process of natural justice, without providing an opportunity to be heard? Dejang Mopars Limited, Madras High Court. Now what? courts have regularly said about this that the liability for payment of tax is automatic. You cannot deny the liability to pay. But however, the quantification requires an opportunity of being heard. If there's any dispute, any objection that the assessee may have, that the professional representing the assessee have, that has to be heard. It has to be accounted for. Only then the order can be passed. But the question still remains. I mean, I'll also like to open this question to the House. Can they issue 74 or can they issue 73? If we talk about only interest amount, can proceedings of section 73 and 74 be invoked for recovery of interest? Now, if we actually look at section 73 and 74, the conditions in which they can be invoked is only when there is a short payment of tax, there is non-payment of tax, there is erroneous refund, or there is incorrect input tax which has been taken. Now, if we talk about the self-assessed liability, there is only a delay in liability. There is no short payment, there is no non-payment, there is no erroneous refund, there is no wrong ITC which has been claimed. Only there is a delay in interest, a delay in the filing of return, delay in payment of taxes for which the interest liability arises. First thing, can they straight away pass the order? Although section 75, subsection 12, if we read, it gives them the power to straight away recover the interest on self-assessed liability. But can it still be done? The courts have regularly said that quantification always requires an opportunity of being heard. Unless you provide the opportunity of being heard, you cannot recover the interest amount straight away. For recovery of interest, notice is mandatory, hearing is mandatory. Arbitrary levy cannot sustain without show cause notice. DRC 01, Rajkamal Builder Infrastructure, DRC 01 cannot be solely issued for recovery of interest where Section 50 does not refer to SCN procedure. But courts have time again said to issue a show cause notice for recovery of interest. But Section 73, Section 74 within themselves does not allow the issue of show cause notice merely for interest unless there is tax liability which is pending in connection with to that interest. So what exactly should be the procedure then? Can they not recover interest? Let's say if 3 years have passed, in the fourth year, can they issue 74? Or if within 3 years, can they issue 73? I personally highly doubt they can follow the procedure of 73, 74 for recovery of interest, particularly the self-assessed interest, self-interest on self-assessed liability. They assess the tax liability, they charge the interest. Even if they do not charge the interest, Section 75, subsection 9 do give them the power. The interest is automatic, it still has to be paid. But what if the time limit has passed? Can they do? Can they still do that? Sir, it's a question to the House for discussion. Can they follow the procedure of 73, 74 for interest recovery? Or they can straight away issue the order?
Sir, yesterday also I put it in the. Sir, I am Paul from Coimbatore, sir. Sir, there's no need for going for 73 or anything, sir. 73. Straight away, they can issue a letter. This is the amount interest you have to pay, and then you pay the amount. That way, they can demand it. This is my opinion, sir.
But sir, what if the assessee doesn't pay the amount?
If the
Court says
assessee
you
does,
cannot proceed without giving opportunity of being heard. And that can only be given through 73, 74. But a mere letter, will that suffice? Will that be sufficient for the opportunity of being heard?
yeah, mere letter is sufficient, sir. Because interest is automatic. Naturally, interest is automatic. So there is no need for separate proceedings under 73 or 74, sir. This is my opinion. Yesterday also I put it the group, sir. This is same opinion.
Sir, I even I agree with that view. opportunity of being heard has to be given, but that may not necessarily always come from 73, 74. They might issue a letter, they will give you the amount, and they will give you the opportunity if they for any objections to be heard. And if still that amount is not paid, I think department then has the right to recover under section 75 subsection 12 if we talk about the interest on self-assessed liability. Any other person please having any other view on this?
Hello,
Yes, sir.
Yogi ji.
Yes,
In
sir.
my opinion, it has to be seen two ways. One is relating to the self-assessed liability, and second is relating to the input tax credit. For the self-assessed liability, if we go by section 50 subsection 1, as you have also highlighted, that it has to be calculated on his own. So therefore, in line with the words in 50 subsection 1, there is 75 subsection 12, which provides for recovery under section 79. And when 7512 was inserted, so therefore a corresponding rule, if I'm correct, rule 142D and DRC 1D provisions were also inserted, that the
Also accepted.
intimation would be given and a 7-day time period would be given, and if no reply or payment is made, then recovery would be directly initiated. And prior to that, there was an instruction that a letter has to be issued and a opportunity of being heard is to be given, and then only the recovery has to be made, because there were apprehensions when 7512 was made mandatory and no procedure was brought in. So that's how, in my opinion, the recovery of self-assessed interest on self-assessed liability comes to the table. Second is relating to the ITC. Now, interest on ITC is as per 50 subsection 3, and 50 subsection 3 does not provide any words of on his own. So for recovery of interest on ITC wrongly availed or utilized, there has to be an assessment proceedings. Now the question is whether 73, 74 can be invoked. So then again, if we go through section 73, 74 and section 122, section 73, 74 only refers to tax, and section 122 refers to due tax. Now, it is yet to be decided that whether 73, 74 applies to tax only, applies to cases wherein tax has been reversed or tax has been paid, but interest has not been paid. Because as far as I remember, there was a pre-GST regime judgment wherein the tribunal has said that the what the department is doing now, that they are, if the tax is paid, they show the tax as due, then appropriate the tax and then recover the interest amount. For that case, the tribunal has specifically said that once a tax has been deposited, it cannot be shown as due and then to be appropriated against the tax, and the demand for interest only be recovered. So somewhere down the line, it is yet to be decided that what is the scope of the term tax. Although in case of Mahadev Construction, the one of the honorable high courts have said that tax means tax along with interest. But that question is yet to be made. So unless until that question is decided, we will always say that section 73, 74 cannot be invoked merely for interest. And for self-assessed liability, 7512 is there, which speaks for, which is in line with section 50 subsection 1, which uses the word on his own. Again, for 7512, the question is what sort of liability is covered under self-assessed interest, whether it is shown in 1 and not in 3B. It is only covered, or it also covers shown in 9 but not in 3B. So that is one of the point. Although Calcutta High Court has given that it only covers the liability which has been shown in 1 and has not been paid until unless the recovery is made. So this is my opinion.
So even in section 50 subsection 3, the input tax amount, I think 73, 74 to some extent take care of that. Why I say that? Now, when we talk about section 50 subsection 3 for the ITC reversal will always be in a case where the assessment has been made by the department. And when we go to 73, 74, it says tax along with interest has to be paid if you have to avoid the penalty. So it may not be direct, but if it is a case of assessment made by the department, then 73, 74, in order to avoid penalty, you have to pay the tax along with interest. If tax is paid, interest is not paid, then penalty you might face penalty also. 10% in 73 and might extend to 25, 50% in case of 74. So I think to that extent on assessed liability, 73 and 74 has quietly taken care of by showing a threat of penalty. Not actually going directly on the interest, but by showing the threat of penalty, they says interest tax along with interest has to be paid. So maybe that is one of the reasons that Mahadev Construction, one of the members said ki tax along with interest has to be done.
Sir, in many cases, what we observe is that whenever you have self-assessed and paid some liability through DRC, generally the central team usually sends you a letter intimating that you have paid this DRC, show us the calculation and whether interest will be applicable on it or not. Provide us a letter. In this form, they are, I think, providing you the opportunity wherein they are checking whether you have paid the interest or how much is the calculation, whether it is required or not. And once you establish, they will drop it, or otherwise, if interest is recoverable, then they will ask you to pay, otherwise they issue this notice 75 recovery. This is the usual method they are following, and in that way they are upholding this opportunity. They are giving this natural justice and hearing in this way.
Yes, sir. I agree, sir. That is the process they are actually following. But again, one of the members yesterday faced the problem of directly getting the order.
True,
So
sir.
yes, that order can be challenged in the appeal, but I think that will be challenged for a limited purpose only with respect to the quantification and not with respect to the levy or the payment of interest.
Yogesh sir, Unni here. Just to add
Yes,
one
sir.
more aspect. You talked about the interest liability being automatic and 73, 74 being not applicable from the start. So can a wrong invocation of 73 make it a part of a 73 proceedings for the purpose of 128A, so that if I apply for amnesty and pay the tax, I'll get the interest immunity despite what para 4 of Circular 238 comes?
No, sorry, sir. Can you ask again? I didn't get it. Wrong 73 means, I didn't get the wrong 73.
Okay, there is a interest liability. Department issue 73 confirms the demand. We go for 128A.
Okay.
So if we are taking the opinion that 73 was never supposed to be taken in the first place and it is per se illegal, then can I use that illegality to get a benefit under 128A?
No, that demand of interest was on account of self-assessed liability.
Fine, it is. But the department chose to
No,
invoke 73.
I know, sir. I'm sir, asking a question actually.
Yes.
Then, sir, again, I'll stand with that 73 is not the correct procedure. 73 cannot be invoked unless there is tax due.
So if there is a notice or an order and ultimately we go for 128A, the immunity won't hold.
Again, 128A immunity again won't hold if it is a self-assessed liability. If you have declared the tax returns and not paid interest, then 128A is anyways not applicable.
No, because of 129A clause 2, any order under 73 is being referred ad hoc without any caveat.
Sorry, once again, sir.
128A refers to an order under 73 without any caveat. So the proper officers have been issuing 73 for notices and orders under 73 for the interest recovery. Then only proceed to 79. So the order per se stands under 73, which has not been appealed by the department 172 or revised by the commissioner 108 being illegal. So as far as I am concerned, I got an order under 73. Can I go to 128A for my 51 liabilities?
Sir, there are two things.
Yes, Yogesh, go ahead, Yogesh.
There are two things. First, issuance of 73 for recovering of interest on self-assessed liability. I think that is per se wrong. As of now, at least, it is per se wrong. Secondly, even if 73 is issued for recovery of interest for delayed payment of tax, I think 128A is still not applicable. So you can fight 73, but I don't think 128A would actually hold for recovery of interest on for payment of interest on delayed payment of tax.
Sir, here what has happened in a very similar case where 73, 74 was issued and the assessee applied for rectification, assessee applied for 128A. What they did is they rejected the application. They dropped the demand and they once again issued in the self-assessed 75 case. So making them ineligible for the same interest. They have not approved that. Initially, they have done this mistake, issuing this interest notice in 73, 74. But when they realized this is a mistake and the assessee will get unnecessary benefit, they dropped all the demand and issued revised notice in 75, making them ineligible for 128, sir.
Yogeshi, in the query which Unniji has raised, and in my opinion, Section 128A only speaks about order being passed under Section 73. Whether it is correctly passed or not, that is not a question as of now when I am filing an amnesty application. If that was a question, then it had to be either appealed under Section 1072 or Section 108. Now, there are hundreds of times when we commit a mistake. But when the matter is going to be assessed and when we say that we have committed a mistake, it always says that time to correct has already been passed. And since there is no opportunity, you have to abide. And since it was the prerogative of the officer which section he had to invoke, and he has chosen to invoke section 73, then it is up to the officers either to have it filed an appeal or filed a review or made a review under section 108. If they have not done either of these two, now they cannot come back and say that we have passed a wrong order. And the case with Ramandeep ji said that they had dropped it and issued another. So once the order has been passed, the same authority does not have a power to drop the proceeding and issue a fresh proceeding. It is just eating a humble pie and say that I have committed a mistake. The act does not give the chance to do so. So in my opinion, we have similar cases wherein we have alleged and argued that although it is matter before the appeal authority, that once the thing has been gone, then statutory it is an order under section 73. And also this proviso, this explanation was inserted as far as I remember on 1st of January 2022. So prior to that, there was no such clarity. And this proviso itself is a matter that whether it would be this explanation, it is a matter of appeal or decided to by the court that whether it has a prospective effect or retrospective effect, because it seeks to create a fresh liability. It is not creating a explaining a already existing provision. It is creating a fresh liability. So in my opinion, in the entire scenario, if 1072 or 108 is not exercised, it is a matter to be argued that I am eligible, and merely because the officer has invoked, it is not only a case of invoking a wrong section, it is also a case of applying the mind and passing an order after application of mind. If it would have been only a case of wrong application that I had to write 7512, but I wrote 73, then it would have been a completely different case.
Yes. I think this is Subramanya here. So
Yes.
the issue what is raised by Uniji goes to the root of the question whether the 128A is qua the notice or qua the issue. Basically, if we see the fabric of 128A and the rules made, it clearly shows that it is qua the notice. For example, they say if the issue relating to 2021 is also part of the notice or order, they go ahead to say that even the tax interest of that particular matter 2021 has to be paid, or else your eligibility to the scheme has will be called into question. If that is the fabric, then I think it is definitely qua notice. And since it's qua notice, once they have exercised their option to go for a notice under 73, I think they are bound by the outcome of it as well. It is like the notification and act is introduced by the government qua notice, but the circular is saying qua issue. So it is like they are approbating and reprobating, which is not allowed. By end of the day, it should test the waters at the court. But what Ramandeep ji said regarding the withdrawal of the order under 73 and then initiating under 75 would be a better course of action for the department to follow to sustain their demands.
Yeah, to
Even
add that, see 128A, at the end it says subject to such conditions as may be prescribed. So what Parliament has delegated, it is only conditions. They cannot create additional restriction through rules or notification. See 128A without any other conditions, entire order is qualified once the tax is paid. So even I'll also agree with others. It should not be denied. the waiver should be available.
May I, sir?
Yes, sir.
Yes, sir.
Sir,
Yes, sir.
to my reading, 128A is for notices or orders where there's some tax payable. And if that tax is paid, then the relief of interest penalty follows. In the situation mentioned by Unisa where the order is only for interest payment, can 128A be invoked? My reading of the section says no, since there is no tax
Another
payable.
one
The
more
tax cannot, so there is no payment of tax. Though the circulars, etc., do specify different situations, but going strictly by the act, there should be some tax payable, and if that tax is paid, then the relief is there. If there is no tax payable in the order or the notice, then 128A will not apply. They have made an application under 128. Let the adjudicating officer decide. But to my reading, it does not apply.
So even Gurjeet sir, even the section when 128A subsection 1 I read, it says any amount of tax that is payable by person chargeable with tax in accordance with notice issued in section 73-74. So in this case, I think we are not a person chargeable with tax in 73-74. It is only the interest, as Gurjeet sir said. There is no tax due, there is no tax demand. They cannot demand any tax. Only for interest they have issued 73. So can 128A be done? I think I'll go with the opinion still with Gurjeet sir said.
बट योगेश योगेश जी इंटरेस्ट का है तो हम लोग इंटरेस्टिंग टॉपिक पे आगे बढ़ते हैं
हाँ,
नहीं तो 120 डे में
इंटरेस्ट पे
रुक
बढ़ते हैं
जाएंगे
सर इंटरेस्ट पे बढ़ते हैं now that's the beauty of GST sir. We started with
yes
interest. We are discussing 73-74. Now we are discussing 7.28A.
yes yes over to you sir.
Sir, so the question was, is there any requirement of order or is there any requirement of show cause notice? I said there is a requirement of order or show cause notice only in case when the assessee fails to pay the tax, fails to pay the amount of interest on his own. It is to some extent a self-assessed liability, the payment of interest. And if assessee is not doing on his own, then department has the right to issue the order, to issue the notice or a letter, as we see normally, to the assessee asking for payment of interest, and if it is still not paid, then they can invoke 79 and recover the interest based on section 75 subsection 12. So section 50 subsection 1, a new proviso was inserted. In a Reflex Industries Madras High Court, again, we discussed with the beginning that Madras High Court said the interest has to be paid only to the extent of the amount the state has been deprived. And what amount they have been deprived? It is only the amount that is paid after the due date in cash and not by way of ITC, as they already have the input tax credit of the person. Then they cannot charge the interest on that input tax credit that was already be available. So this is something which started the actually litigation between gross and net, and which has now been settled to net liability. Rule 88B was inserted. Rule 88B was inserted retrospectively from 1st of July 2017. And even that rule made it clear that interest would be charged only on the net cash liability. But then another question arose. What if the cash was already available in the electronic cash ledger prior to the due date? Eicher Motors, again, Madras High Court once again said that once the amount reaches the government account, even if it is not, even if return is filed after a due date, the government already has the interest. There is no failure, there is no delay in payment of tax when it is already deposited in the cash ledger. Now, this actually, the ambiguity regarding this started even at the time when the judgment or the amendment came with respect to the credit ledger, that it has to follow a same logic for the cash ledger. But a lot of discussions were done, and even that was said that cash ledger is the amount actually belonging to the assessee. They can claim the refund at any time if they want. It is like their bank account only. So for long, this dispute kept on going. But finally, Madras High Court settled it by saying that the amount has actually reached the government account, and when it has reached the government account, the tax is paid even when the return is filed late. So even that dispute was settled. Again, a proviso to Rule 88B was inserted, where this clarification was given that even if the balance is in electronic cash ledger before due date, no interest will be levied. However, this proviso in Rule 88B have been inserted prospectively, not retrospectively, but I guess in all good sense, I said it has to be read retrospectively and clarificatory in nature. Even if you have any prior dispute where you had the balance in your cash ledger, but filed the return late, interest shall not be payable, even in the earlier cases. But sir, this actually brings me to another important question. Very recently, I had this case. I faced this case. Now, one of the person, it was actually a restaurant. He filed the returns late, and not only his regular returns late, but that the form we filed for claiming TDS and TCS, that was also filed late after the due date. Tax was paid and in the cash ledger. Restaurant does not have the option to avail ITC at all. Tax was paid through cash ledger, but that amount in cash ledger was also credited late. But in essence, if I see, the tax was already deposited to the government account. So will interest still be payable in this case? And when we search for this question, I also went through section 52, section 51, 52 for TDS, TCS. And they say the TDS, TCS amount has to be claimed by the assessee as per the manner prescribed. If you go to the rules, it again says the amount claimed. But the process that we are following on the portal, I actually don't see any such process being prescribed in rules. Maybe I missed something, or even that form is being notified in rules. So if that is not the case, can assessee say that the amount was supposed to be credited directly to my credit ledger? Even if it is not credited, the amount was already with the government before the due date, and interest should not be charged on this. So anyone on this one, the procedure of claiming TDS, TCS, if I claim it after the due date, where the tax was paid already with the credit of government before the due date. Sir, any opinion on this point?
क्या योगेश जी इशू क्या issue?
Sir, issue is that I'm a restaurant and making supplies through online platform, e-commerce platforms. My TCS was being deducted. I filed the return late, and even I filed that form for claiming TDS, TCS after due date and paid the tax in cash. So the amount that was available to me in form of TDS, TCS, should interest be levied on that amount when the amount was actually paid to the credit of government by my deductor or by my collector before the due date? And the procedure that we follow to claim, is that procedure notified?
तो ideally since it has not come to my electronic cash ledger, फिर तो मुझे वो आइचर वाला amendment जो आया है, उसका benefit I don't think we'll get. So ultimately the officer will see whether the balance is lying in my electronic cash ledger on the date of filing of return, due date of filing of return.
Right.
So the
So in
cost
my
for Eicher Motors was the amount have reached the government account.
yes, that's what. So here it is not reached.
But
Even
it is
that
my
process
it is
the
my or
government
not
not.
how the government will know. It may be wrongly credited to my account somewhere.
Yes, yes.
So I
So
have to
again,
accept it
this is
first.
why I come to the procedure of claiming. Is that procedure notified?
Yeah, I think the provision says shall be credited to his electronic credit ledger, but more as a convenience, we have been given with that form to accept, reject, and do it. There is no such form notified anywhere. That way, it is more a portal made tweaking to help get to know the exact amount. So that should make a good case for us to say the amount was already there with the government, and of course, should not be any interest on that. Even we came across this situation in the context of TDS, where it says it shall be credited to his electronic cash ledger, shall be credited by the supplier. That appears to be the wordings there, which means it's already there with the government. Though I may have filed the form a little late.
And
Again, largely
let us
the
assume there is a wrong deduction by the tax collector. Is there any way the GSTR 7 can be amended to change the recipient's GST number?
They have an amendment option, if I'm not wrong.
After accepting.
Now, after
No,
accepting, I think they
there is
restrict
no,
it. They restrict it.
Then
Yeah.
restricted it. So the question of even if it is not yours, it will go and sit in your cash ledger. So technically, the government has got its money. It's only a manner of practical procedure that the accept, reject, and claim option has been enabled.
Correct.
So I believe the House agrees the interest should not be payable on this amount. I hope the House agrees on this one.
This relief can come only from the court, not from anywhere else.
Yeah, yes, sir.
Yes,
Yes, sir.
yes.
It has to be tried there. only.
Definitely.
Yes.
Definitely. This relief can only come through courts, not otherwise. So another important question to that proviso that we were discussing about, it says interest in respect of supplies made during a tax period and declared in the return of that period after the due date. The interest will be charged on net amount only in case when you make a supply during the period and you report that supply in the return of that period only. In case you miss to report that supply in that period, even if you have filed the return on time of that period and you report it in the next period, interest will be levied on gross amount of that particular supply, even if you have the balance in your electronic credit ledger. I guess we are clear on the same page on this portion. That if we report it in the next period, any supply, if we report in the next period, whatever the amount of tax is payable on that supply, interest to be charged on the whole amount, irrespective of the fact that whether I had the balance in my credit ledger or for that matter in cash ledger also.
Yeah, I think that is one more case where courts have interpreted to cover even those situations, the other situations which you pointed out. But the law is retrospectively amended only to only one situation where it is on account of delayed filing. So I think again it will go back to test at the judicial forums to see if even this should get covered. Payments done through DRC 03 post the filing of return with sufficient credit being in the credit ledger or cash ledger all along.
Yes, sir. Again, although last time we even had a discussion whether credit ledger can be used for payments other than the return liability. Okay, but that is for the next time, I guess. Even that will be interesting read. Section 50, subsection 3. A
Yogesh
lot of human cry.
ji,
Yes, sir.
for 50 subsection 1 and the proviso, if you can go back to the proviso, and it
Yes, sir.
says where the supply is made during a period, interest in respect of supplies made during a tax period and declared in the return for the said period. Now, supposedly take a scenario wherein supplies were made and the supplies were leviable to tax on CGST, SGST, and cess. And CGST and SGST tax were duly reported in 3B, but cess was not reported. In addition to that, let's take another example that supposedly I made a supply wherein I treat it as an exempted supply and I reflect it in 3B. But subsequently, after 1 year, I feel that tax is required to be paid and I pay it through 3B again. Now, only tax amount in both these cases have been reflected after a time of after say one year. Now the proviso is only restricting to supplies made during the tax period and declared in the return. It is not speaking about any that the tax also should have been reported. So the first thing which I read and come to my observation is that it is only speaking about the supplies being made and declared, not about the tax, because these are two separate things which are to be declared. It is not that once I declare a supply, the 3B automatically calculates the tax. So if supply would have been declared, tax would have been automatically calculated. These are two different things, and proviso is only restricting itself to the supplies being made and declared, not to the tax amount. So in my opinion, once the supply has been declared, although tax has been paid late, either by way of reflecting in 3B or by way of DRC 03 before initiation of any proceedings in the section 73(4), that is also a separate matter, that whether that restriction is constitutional or not. But going by a literal reading of proviso, the first thing comes to my mind, and I seek your opinion and the all the members of the group. And second is, supposedly I have received an interest, and the interest say in November 2023, I failed to pay the tax on that interest. Subsequently, in March 2025, I issued the invoice, and that invoice was correctly declared in the return for the month of March, because supply being made and declared is linked to invoice being issued. If we go to the provisions and how the supply being made has been referred into the statute at different places. So now the question is, although I have not paid the tax on advances, but I have duly declared the supply in the month and the return in which it was made. So if there is a sufficient balance of ITC from November to March, even though tax has not been paid on advance, but since the proviso says only about supplies being made and declared, so whether in such case interest is required to be paid, I am clearly going by only by the words which have been written, not by the intent that yes, the tax was payable, because proviso is giving me a benefit provided I satisfy the conditions, and it has to be strictly interpreted as per the words which have been written. So in my opinion, again, even if the tax on advance has not been paid, but supply, the invoice was correctly reflected in the month in which the supplies were made, interest again should not be payable. These are the two scenarios which I seek your opinion. Although yes, it is a litigative part, and there is no statutory backing by the judgments of any of the court. But since we are discussing in SMS and we go on a threadbare discussion, so these are the two different issues which I would like to share before the members have their opinion.
Sir, that's just a proviso I have open. Let us just read proviso for once as it is. Provided that the interest on tax payable in respect of supply made during tax period and declare in the return for the said period. So first is whether it says tax payable and supply has to be reported, or only supply has to be reported. It says tax payable in respect of supplies made during the tax period and declared in the return. So are we restricting it to just supplies or also reporting of tax payable?
See, in my opinion, interest on tax payable. So tax payable is not to be read with the supply made, but it has to be read along with the interest word. So interest on tax payable in respect of supplies made during a tax period. So interest on tax payable is one word, and in respect of, it starts with another word of supplies made and declared in the said period. So it has to be read together. So tax is not attaching itself to supplies made, it is only attaching itself to the interest part.
Sir, this is actually an interesting read, but I feel that will tantamount to wrong reporting. That
No,
will tantamount to wrong
supposedly
reporting,
I
and
see.
even if interest has to be escaped, again it has to go through the litigation rounds and the high courts.
Yes, definitely it has to go. It has to go. I'm not saying that the assessing officer would be, but just I want to have the opinion that the proviso is using these words and how these words have to be interpreted. If we can have a discussion on this, since we are discussing 50 subsection 1 and also the advanced part.
So for advanced part, I'll say the time of supply takes place at the time of when the advance is received.
Yes.
If the time of supply has taken place, then supply is deemed to be made at that time. If supply is deemed to be made at that time, then interest should apply even if I'm issuing the invoice at a later period. So for advance part, I think the time of supply provisions will play an important role because tax liability arises at that time only when the advance is received.
But if we go through how the term supply made has been used supposedly in section 31, which speaks about invoices to be issued, and section 22, which speaks about registration, then it is only linking itself with the invoices being issued rather than the advances being received, because we have to see that how this term has been used across the statute. Yes, litigative aspect, I am not saying that it is a clear-cut aspect, but these are the two issues where we have taken a stand on this point and thought worth sharing during the course of discussion under section 50.
I think for time of
Sir,
supply, that's where the deeming fiction comes in. That's how I feel. Yes, sir.
sir, if
Please, sir.
advances is not the tax on advance is not covered under proviso, it will be hit by the main section, subsection 1. Then the
Again,
this is proviso is just a relief. So if that advances are not covered in this proviso, then the advances are covered in the main subsection 1. Without the proviso, interest is payable.
Well, sir, proviso is taking something out of the main provision, and it is giving a beneficial position to me if I satisfy the conditions which have been provided in the proviso. So if I have satisfied the conditions which have been provided in the proviso, then I would not be going into the main provision. I would be remaining keeping myself in the proviso part, that to the extent of tax payable in cash, I have to pay the interest.
Yeah, that's it. No? If we say the advances are not covered by the proviso, then I don't get the relief provided by the proviso. That is what I am
Yes.
reading into it. If advances is not the supplies made, then I don't get the relief which is provided in the proviso. That means the tax is payable as interest is payable, sorry, as per the subsection 1. Within
even
that, there
in
is a relief given by the proviso that the interest on tax payable in respect of supplies made. This is irrespective of the other argument which Yogesh is mentioning as the time of supply. But even if we say stick to your viewpoint that advances are not supplies made during a period, but the tax is payable on advances received for services. So if they are delayed, that tax
cover a
payment
case
is
where
delayed,
I
even if the amount is there in the
claim
cash ledger
surpluses
or
tax.
so even if we talk about supplies made during the tax period, again I'll go back to time of supply. When the supply is set to be made, it is section 12 and section 13 that will govern the time when the supply is made. So if I have received the advance, then my supply is set to be made in that period only. That's where the deeming fiction comes in. Like in that this part I feel will be covered with the time of supply.
Yogesh, we can move to 50 subsection
Yeah.
3 as we are running short. So we.
Sir, before moving on, one more thing. There is one aspect of 51 which was left out at the time of 34.3. What is your view on interest on debit notes?
Only it was discussed and it was kept pending for reading through two decisions, as far as I remember. That how the tax portion has to be seen for levy of interest in case of debit notes. So we will put this in the group because those were two decisions which the learner member who had taken that part, he had referred to those decisions and it had to be shared and then discussed upon. So we would take it in the next part.
No, because it is also connecting the provisions of the proviso that you have just highlighted. Because here also, if I am declaring the entire value of supplies made, I have declared the supply. So the question of difference between supply to be made, like in the example, doesn't apply. It's actually I have declared the supply. So proviso squarely hits. And the only thing is the tax rate has changed from 5 to 12 or 0 to 5 as the case may be. So can the proviso save me here?
Sir, Uniji, I have this opinion, although it's a litigative issue, but in my opinion, the proviso is only restricting itself to the supplies made, not to the tax portion.
Yeah, I
Yogesh sir,
think on
your
your
views.
this part,
Yes, Yogesh ji,
Yes, sir. Coming
you
to
can just
section,
continue 50 subsection 3 so that we can
section
conclude
50, subsection 3, when there was a lot of human cry regarding the availment but no utilization. If I have not caused any loss to the exchequer, then why interest should be charged? And that this section was again suitably amended. And suitably amended to say that only a wrong availment will not be levied to interest, but also the utilization. It is only when utilize the amount, the interest shall become leviable, shall become payable, shall become chargeable. And the amount that you have utilized, only to that extent, the interest shall be levied. See, if you have, say, claimed wrong input for, say, 100 rupees, but you have utilized only 15 rupees, 20 rupees, and then you reverse that credit after, in the next return period, then the interest shall be levied only to the amount of extent that you have utilized and not the whole amount. But again, somehow this is different from, as I said earlier, also 73 and 74, which uses the word or and not and. It says utilize availment or utilization. So we will not charge interest, but we'll still take the punitive action. So somehow there is a discrepancy for which I have not been charged, but I am being made to pay the penalty. And another important aspect that came to me in a recent audit of one of my client. Now there was a liability. SSC had not paid that 1% liability 86B. The department asked for the payment of tax in cash. So will interest be payable on that amount, that 1%? And can penalty be levied on that 1% when tax was actually paid, although through ITC? See, it is not a non-payment, it is just a payment by an unapproved method or by some other method which is not as per law. So will it be considered as payment if it is not paid in the manner prescribed? Will interest be levied? And of course, will penalty be charged? This is one another thing that I would like to have a discussion on regarding that 1% liability on payment of interest and penalty on that. Anyone has any opinion regarding that payment of interest where I had already paid to the government, though I paid it through credit ledger, not cash ledger, but the amount is credited to the government account anyways.
Sir, we are contesting it regularly and we are not paying any interest on that amount, considering the same principle of 77. That already we have paid the tax. There is a specific relief given in 77. Only my mode of payment has to be changed. And that is why we are not paying any interest on that.
Yogesh ji, in my opinion, Rule 86B and Section 49, subsection 12. In my opinion, the case which can be made out can only be regarding wrong utilization of ITC. It can never be regarding non-payment of tax. It is similar to the case wherein I avail ITC of Section 17, subsection 5, and I use it for making the payment. It is not a case of non-payment regarding, rather it is wrong utilization of ITC. And if we see 86B and 4912, these are coming in the chapter of payment of taxes. So it is not coming in it is not restricting. It is not a case of non-payment of tax. It is a case of restrictive utilization of ITC, and that's why 86B has found its enabling provision in 4912, not in the output tax provisions. And we are contesting that if ITC is there, even though I made a payment or I was required to pay in cash, so it's a wrong utilization of ITC, and if ITC is there, there can be no interest and penalty as it is not there because tax is already paid and there was no intent to evade unless until it is shown that it was an intentional aspect. So it's a case of wrong utilization of ITC.
Pujash is calling you.
Arpit ji, one doubt.
Bartan kar do.
Hello.
Yeah, Amni ji.
Let us take the same analogy to a different matter. So let us say I had identified a missed out reverse charge liability of an earlier year. Accidentally, I used DRC03 and paid it through credit. 2 years later, department identifies this RCM and said, you paid through credit, please pay in cash. Do you still say there is no interest based on the same 86B analogy?
See, again, in that case, the output liability and it is finding itself in the definition of output liability that it cannot be a case wherein RCM is covered under output liability. So therein they are making a specific exclusion from the liability part. Although what you have said, it can be used a case that it is a case not is a case of non-payment, but only a case of wrong utilization of ITC rather than a non-payment of liability.
See, again, reading section 4912 with 86B, my payment has been specifically restricted from electronic credit ledger and has to be made through cash ledger only. Can I actually say my payment is made if I'm not made to cash ledger? I have my doubt. I don't think I can say I have made the payment till I pay that amount to cash ledger, because law has forced me to pay through cash ledger.
See,
Like,
if we go through Rule 86,
wrong utilization, I think, can be another aspect, but I still feel it will fall under the category of non-payment unless I make the payment as per the law, as per the procedure that is prescribed.
if we go through the language used in Rule 86B,
We'll just open it.
Sir, then where this payment has gone, if it is not considered as a payment, we have to ultimately claim the refund of that amount by making the payment through cash. So
Yes, sir.
ultimately, payment is done. I understand that it is not done in the right way.
Then department will say limitation applies.
But then it is not tax, sir. It is not tax. It is just a
Yes,
payment.
yes,
Limitation
correct.
should not apply.
Yes. And sir, again, the same argument which in 77 they have clarified that on making the payment, that become an extra payment on that day, where you are making payment from cash. So from that day, limitation will be calculated.
Yogeshi, if we go through the heading, restriction of use of amount available in electronic credit ledger, it is different. It is not saying that output liability. It is a restriction in use. So if I have used, it is a wrong utilization, not non-payment. And if we go through the language, notwithstanding anything contained in this, the registered voice shall not use the amount available in electronic. So it's a case of wrong utilization, not a case of non-payment.
But sir, this restriction is regarding the output tax liability only.
Yes,
na?
yes,
If,
yeah,
even if I use,
I have no doubt about that, but it is
Yeah.
speaking about utilization part, not about non-payment of liability. And that's why it has found itself, if we go through what has been stated in 86A, now in case of 86A, certain amount is not allowed to be, it is allowed to be blocked. So how the high courts have interpreted that it is a restrictive rule for utilization of ITC, how they have interpreted 86A, and 86B is also in the same breath, wherein it is saying about use of use of ITC in electronic credit ledger. It's a restriction on use. So it's a case of wrong utilization rather than non-payment.
Can we borrow the similar principle from that place of supply provision where it is said when 77 that place of supply you have paid CGST and SGST, but it is turned out to be IGST and IGST CGST, even though you have paid the tax but not in the right head. In the similar way, it is the payment.
Ramandeep, in my opinion, that stands on a separate footing because therein the tax was required to be paid to a correct state, and the head there are three different statutes. And if I paid under the wrong statute, therefore there has to be a deeming fiction for treating it in the correct statute. So therefore 77 was needed. But in my opinion, 86A is only putting a restriction on use of credit ledger. So it's a case of wrong utilization. That is how I feel, and that is how we are arguing it also, 86B.
And sir, but 77 again gives you the relief of paying interest also. That is on
Yes.
the same footing that because tax has already been paid in the different head or the different tax. In the similar way, I think we can.
77 goes one step ahead, that
Hmm.
even if the amount has been deposited in different pocket, still there would be no interest if it has not reached to the correct pocket. So therefore, there was a specific requirement for putting that proviso.
Correct.
And something, in my opinion, 86B and 77 are different footing, because 77 is a purely case of output supply, 86B is case of restriction on use.
Okay.
And again, these are all interpretive issues, and as we already said that SMS only discusses only litigative issues. Whatever is clear, we do not discuss it here.
I think Raman sir, the section 49 is still pending. And whenever we take it next, I think 4912 will also be an interesting read with respect to 86B.
Definitely, sir.
Is
Definitely.
restriction to use or
Ramanji ji
whether
himself
output payment is not allowed.
49.
Definitely, sir.
नहीं नहीं रमन
Definitely.
रमनदीप जी had taken 49 तो वो हो गया
Definitely, sir.
अभी अभी हम लोग आगे बढ़ेंगे
पक्का सर, पक्का,
चलिए
पक्का.
anyway thank
Yogesh,
you very much हाँ
Yogesh,
sir.
yes
just
sir
one
yes sir
small thing. In your PPT, in the previous slide, slide number 9, I believe the rate under 50 subsection 3 is 18%.
18%. Yes, sir. Yes, sir. 18%.
हाँ
I just
18%.
notified. Abhi all,
Yes, it is
clear about it.
18%.
yes
Yeah,
yes
yeah. I just wanted to clear that there is no confusion. No? So it is
No,
just
it is 18%. It is
it
only
is
mentioned.
just a typo there. Thank you.
Yeah,
Thank
yeah,
you.
yeah, yeah.
yes so thank you everyone for joining I think should we continue
Yes, sir. Arup ji, your voice
क्या
was.
करें okay I'm saying should we continue
No, it's already 10 a.m.
so I think we'll have to end it here so over to you Arpit ji
Acha. Thank you, Rupji, and thank you, Yogesh, for listing out the critical issues at the starting of the session and covering all those issues, and not reaching to an agreement on a particular issue, but taking all the suggestions and all the discussions in the part is the hallmark of SMS. And we have gone beyond the boundaries and how section 50 has to be interpreted, and section 73, 74 can be used or not, or section 75, 12 is appropriate and when it would be appropriate, and whether demand can be, interest can be recovered by virtue of section 75, 9, even though order does not specify it. So you have taken and touched all the relevant issues in the section 15 in a matter of 1 hour. That itself speaks a lot about how you have taken the issues and discussed it. And all the members have duly participated and share their views. And section 4912, rule 86B, and 50 subsection 1, these are all the issues which will be decided by the courts, and every member have their own opinion, because it's such a broad matter. So thank you very much for such an enlightening session, and all the participants for joining in. And we look forward, Yogesh, again on the platform of SMS on another section, and also to all the other participants to do join and take the initiative to come on the platform SMS and discuss any section as you feel correct. So thank you very much, Yogesh, for your
Thank you, sir. Thank you, everyone.
thank you everyone thank you
Thank you.
Thank you.